Fellow dopamine addicts, it's Thursday night and you're watching Crypto Trader, the world's first televised cryptocurrency investment show. You know, I love Bitcoin and I love crypto because it gets my dopamine going. We are trading in a week where we hit an all-time high of just under $6,000 in Bitcoin, and I'm looking at the price right now and it's nowhere near the all-time high that we hit. And that's why we love crypto. But there's a lot more going on in the markets. Ari Paul, what's happening on the markets this week?
Well, the trend for the last couple of weeks has been Bitcoin rallying and everything else lagging. Ethereum has been struggling to keep up, and many altcoins have actually been selling off. So it's a really interesting regime where normally we expect kind of high beta. We usually expect altcoins to if Bitcoin's up 10%, we expect other things to be up 15 or 20. And what we're seeing now is, I think a lot of traders and speculators were underweight Bitcoin. They were fearful of the 2x hard fork coming up in November. And even those who were bullish, they were greedy, right? They wanted better returns. And so they were in all sorts of altcoins. And then, we had the China news come out. And by news, I mean, there's kind of this whole massive confusing, China's going to ban ICOs and then ban exchanges and then ban mining. And then maybe they're not. And so Bitcoin fell to 3,000 and then it made new all-time highs 2 weeks later, which is, it's hard to think of a more bullish signal than something that is terrifying to people, and then you have new all-time highs. So everyone was kind of caught off guard, and they're now playing catch-up. They're buying every dip in Bitcoin because they were underweight or effectively shorted.
So Ari, Bitcoin had a run. The altcoins and the other coins didn't quite follow the Bitcoin run. Are you expecting people to take profits from the Bitcoin run and invest them into altcoins because they don't want to go out of crypto into fiat? So that would maybe cause an altcoin run. Are you expecting an altcoin run?
My best guess, and it really is just a guess, is that it'll be mixed. It won't be Bitcoin versus altcoins. I think some of the altcoins will probably do well over the next 3 weeks, and some will not bounce. So I think what it'll look like to a trader is the start of a bounce where everything seems to start coming back. And then for a lot of those coins, they'll just die. The rally will stop and they'll fade back. But then a few, I think, will continue rallying. I'm optimistic about Ethereum being one of the altcoins that does rally over the next 3 weeks.
Ari, which other coins are you optimistic about?
Monero, last time I was on the show, I mentioned that I like Monero. I still like it. It looks technically strong. I think it's found a good floor here. So I think that's a coin that when altcoins start rallying, it could be one of the leaders. Another coin that I like on both a fundamental and technical short-term basis is Vertcoin. The Vertcoin has a leading engineering team that is very focused on, they were early to implement segregated witness, and now they're at the cutting edge of atomic swaps and interoperability. And Vertcoin has been holding up pretty well.
What about BCH or Bitcoin Cash? Are you a Bitcoin Cash bull or are you a Bitcoin Cash bear?
It's challenging. I don't have a good sense of the timeline. I'm hesitant to make like a 1 week prediction. I do think Bitcoin Cash is an attractive buy over the next, call it 2 months. And here's why. So right now, Bitcoin Cash is about as bad as it can be. It has almost no hash power. It feels like it's dead in the water, but there's actually a pretty aggressive roadmap. So the lead developer, Amaury, recently produced an improvement to the difficulty adjustment mechanism that will help. So right now, Bitcoin Cash, its hash power, its difficulty, pogo sticks. It goes up and then it goes down very, very quickly. So it looks like they're going to fix that. And there's a fairly aggressive roadmap for Bitcoin Cash to make it a better protocol.
I'm noticing that there's a new trend or a trend where ICOs can't raise or aren't raising the amount of money that they set out to raise in their white papers. So earlier this year, if you just published a white paper, you could raise $30, $40, $50 million. But now what I'm seeing is that the guys are struggling to raise money. We had the Change Bank ICO, and they were going to raise, I think, 200,000 Ethereums, and I think they raised 50,000 Ethereums. You've got Science, where there was a whole lot of hype, but also struggling to sell their tokens. You've got Doc.ai, also struggling to sell the tokens. Is this the end of an ICO bubble?
So here's my prediction. There are going to be a lot fewer ICOs in 2 months that are all credible. Most will raise way less money, but you will have a smaller number of very high profile ICOs, things like Mesh. So Mesh is a project that tries to oversimplify, tokenized Tor. Tor is, the onion router. And it has the backing of Andreessen Horowitz and some other venture capital firms and a lot of big names who are investing directly in it, which is unusual for a VC firm to invest directly in an ICO. That hasn't happened that many times. So I think you're going to have a few very high-profile ICOs that do very well.
It's also great to hear that Ari is an Ethereum bull, especially ahead of the DevCon conference that's happening in Mexico in November. And my next guest, Josh Miltz, he's also an Ethereum bull. Josh is the CTO of Bitfund. What does Bitfund actually do, Josh?
So Bitfund is an online platform where we make it very easy for your average investor to invest in a wide variety of cryptocurrencies in a much easier manner than it was previously. We've noticed that there's quite a kind of curb that someone has to get over to invest in multiple cryptocurrencies, especially as a non-technical person, and that's what we're aiming to tackle.
So I'm going to get you back into the studio at another time, and then we can talk a whole lot about Bitfund. But today I want to talk about something else. I want to talk about Ethereum. So we had this hard fork in Ethereum, and everyone was expecting to get these free tokens, like the Ethereum Cash tokens, and it never happened. People didn't understand that this hard fork was just a software upgrade to the Ethereum network. Tell me about the software upgrade. What actually happened?
Sure. So there's a few things to consider when assessing hard forks. Importantly, what a hard fork actually is an update to the software that is not actually compatible with the previous software. So what that means is that all the people who are mining the cryptocurrency, in this case Ethereum, have to update the software on their mining clients in order to be able to be mining the new blocks, which are now no longer compatible with the old method of mining. So what has to happen is these miners have to update their software. If they don't update their software, which they don't have to, and they choose to continue mining on the old chain, then what can happen is the blockchain essentially splits. So and that's exactly what we saw with Ethereum Classic. So it's essentially consensus that you're looking for in the community if you don't want to split the blockchain. But in this case, with the Byzantium upgrade, there was very much so a consensus.
Well, we saw that, and we saw the picture of Vitalik toasting with a fork with his fellow developers. I love that picture, and the reason why I love that picture is it just shows the humility under which Ethereum operates. It's a very humble network of good people doing great things. DevCon coming up 1st to 4th November in Cancun. Are you a bull ahead of DevCon?
I'm definitely a bull. I think following this great hard fork which we've seen now, where the community came together and it went off without a hitch essentially, going into this conference now, I think we can definitely take a bullish view on Ethereum. Once again, it's been very impressive what the team has been able to achieve. The update itself brings some very interesting new features to Ethereum.
Let's talk about the update. Tell me about the features that it brings. What are these features what can we expect to see as users or investors?
Yeah, so there's a couple of things that have sort of, I won't say plagued, but have sort of been had a negative impact on the blockchain in certain applications. One of those things is privacy. So as you know, the blockchain is essentially a distributed ledger. It's open access. Anyone can view transactions, can view accounts, and there's very little privacy. Now that sort of excludes a whole lot of applications to the cryptocurrency.
Privacy applications.
Privacy applications,
yeah. Exactly.
So anything that has sensitive information is kind of excluded. So what this update in Byzantium has brought is a new mathematical method for doing certain things, which allows the network to have an element of privacy. So in the future now we'll be able to have private transactions.
So we see private transaction. What else does this upgrade bring?
The other thing that has been affected is the actual time that it takes to mine a block. So in the update, before this hard fork, the time to mine a block was sitting at around 30 seconds. After the update, we've now seen it decrease to just under 15 seconds to mine a block.
So we've got more blocks happening. What does this mean for miners? Are miners making more money?
It's an interesting one for miners because the block rewards have also changed as part of this update. Successfully mining an Ethereum block up until now has given you 5 Ether, and with the update it's now decreased to 3 Ether. But because the time that it takes to mine these blocks has decreased, we're now seeing that on average you're actually earning more as a miner, and that number comes down to between 23 and 24%.
Is Ethereum on proof of stake mining at the moment?
It's not on a proof of stake. It's not on the proof of stake method at the moment. It is a long-term goal, however, of the Ethereum team. So the estimates up until now have been a year to a year and a half before they can finally move on to proof of stake. But for now, it's remaining proof of work.
Okay, so are you an Ethereum bull? Are you buying Ethereum at these levels? Yes or no?
Yes.
In Vitalik we trust?
In Vitalik we trust.
In Vitalik we trust. One of the criticism that the critics of cryptocurrencies have is that they say that you can't invest money in cryptocurrency and earn a yield or earn interest while you're holding your cryptocurrency. And therefore you're reliant on the capital appreciation alone. Now my next guest is challenging that, and he says that you actually can earn a yield on holding your cryptocurrencies. Sean Zuckerman, you say that you can earn a yield on your cryptocurrencies?
So it works by a method of protocol called proof of stake. What is proof of stake? Proof of stake enables the network enables you to utilize your coins on the network, and it gives you rewards by allowing you to stake your coins on this network.
Okay, so for our viewers, what you're actually saying is that there's a thing called proof of stake mining.
Correct.
And in proof of stake mining, the amount that you mine depends on how much of the network coins you actually own.
Correct, that's exactly right.
So you're saying if I put my coins into a wallet and I almost become a miner, a pseudo miner,
You actually are becoming a miner technically, but without the proof of work protocol. By proof of work, you have to outlay money with regards to electricity, to rigs, and so on and so forth. With proof of stake, all you need is a computer, a proof of stake coin, and you earn passive income on a daily basis just by having those coins sitting in your wallet.
But the computer has to be on 24
Your computer
hours.
has to be on 24/7. Alternatively, there is a way that you can obviously run it through a VPS. But over and above the proof of stake mechanism, there's what you call a masternode, which a masternode is you need obviously a certain amount of coins of that specific crypto, and that is the one that is the verifier on the actual transaction that actually verifies that stake. But the masternode earns a higher reward than the guy that's actually just normal staking his coin.
Okay, so if I want to earn passive income, I buy these coins,
Correct.
put them in the wallet, and I loan them to miners who are going to mine using these tokens.
Well, you don't necessarily loan them to miners, you loan them to the network to assist with the transactions.
And if I have enough coins, I can actually get a masternode.
Correct.
And then I can make real money mining.
Then you can start making real money.
But it's not all coins. I mean, you can't do this on Bitcoin.
It's not all coins. So the one that I'm very, very involved with and I love is a coin called Neutron.
You've been telling me to buy Neutron since it was 5 cents. And
Correct.
today, what's it trading at today?
So it's roughly 14-15 cents at the moment.
Okay, so what you're saying is if I would have bought it, I would have made 300% or 200% return on my money.
Correct.
But I also would have made passive income if I would have left it on a computer.
On a daily basis. And obviously the rewards all come down to how many coins you obviously have in the wallet. Obviously the more coins you have in the wallet, the higher the reward.
Okay, now is Neutron the only coin that I can do?
No, so Neutron's is one of them, the one that I love the most. It gives you a 79% ROI from a masternode perspective. But there are other coins out there. The likes
79%
per annum.
Per annum?
Yeah, per annum, that's
Wow.
correct. Yeah, so you're getting a huge return on your money with regards to Neutron. The other coins on the market like PIVX, which is obviously a privacy coin, which is a staking coin as well. As you need 1,000 coins to run a masternode for PIVX, which will cost you roughly $30,000. Then there's a coin called Crave, which is also a staking coin, and you can run a masternode. And obviously the big daddy out of all of them and the cream of the crop is Dash.
Okay, so Dash, how much does a masternode of Dash cost us
So
today?
masternode Dash will cost you a little small fortune, roughly $300,000.
Okay, and if I do outlay the $300,000,
You are going to get roughly 7% ROI from a per annum perspective. And the reason being is that there are so many masternodes locked in at the moment. And that's because of that's literally because people love these coins. It's not as volatile as the other coins. So when all these other coins have these huge rises and falls, Dash pretty much stays pretty consistent because of all these coins locked in. No one wants to sell them.
but that means that a lot of people are actually using Dash. If you need a lot of miners, it means that there's a great uptake of Dash and it's out there.
Correct, that's 100%.
Let's talk about the coins. So
Yeah.
Neutron, you mentioned that's your favorite coin.
Neutron
I
is
know
my
it's your
favorite coin. That's
and
right.
I think after the show, I'm going to go out and buy some
I think
Neutron.
everyone should go and buy some Neutron.
What else? So you got Neutron,
Then we got PIVX.
PIVX,
Yeah, then we got Crave.
Crave,
Then we got Dash.
and Dash. And
Yeah.
Dash is the big daddy.
Dash is the big daddy.
I was in London at the World Blockchain Forum a few weeks ago, and I caught up with Ryan Taylor, who is the CEO of Dash. So I'm walking around the World Blockchain Forum and I see this guy and he's wearing jeans, a t-shirt and a jacket. I ask him what he does. He tells me he's the CEO of Dash Core Group. Ryan Taylor, you're the CEO of Dash Core Group and you've been talking a lot about Dash and what Dash is up to. Dash is the 5th largest cryptocurrency today. But what is Dash?
So Dash is a cryptocurrency similar to Bitcoin. We're actually a fork of Bitcoin with some additional code built on top in order to provide additional functionality. That includes governance, some self-funding or a budget system that allows us to fund the system, and it includes features that consumers really like privacy and instant transactions.
And how quick are your transactions?
So transactions on the Dash network are around 1 to 2 seconds.
1 to 2 seconds?
Yes, so very similar to the experience of using a credit card, and we think that this is necessary for consumers to really adopt digital currencies. They're benchmarking against the experiences they have with other payment methods.
And how do you achieve 2-second transaction times when your competitors such as Bitcoins have got full blocks and sometimes take 10, 15, 20 minutes per transaction?
Yeah, so with almost all digital currencies, the authorization and settlement occur at the same time. But with credit cards, when you're at the store, the authorization takes place right away and the settlement takes place 3 days later with the merchant. But we don't see that as the consumer. And so what the merchant needs is assurance that they're going to receive that payment. And so what we do is we introduce a second type of security built into the technology in the background that provides that assurance. It basically makes it so that the user could not send those funds anywhere else. And so by separating settlement and the actual authorization, the experience for the consumer is great, the experience for the merchant is great, and 2.5 minutes later, it actually gets confirmed to a block.
So it's like a credit card company which basically takes an authorization, doesn't pay the merchant until the authorization is actually, so we say, debited or approved.
Correct.
Now you were telling me that Dash is not just a cryptocurrency. There's a whole bigger story, a bigger
Yes.
why behind Dash.
Exactly, a much bigger why. So most digital currencies are passive protocols, a lot like HTTP is for the web or something like that. They don't actively participate in their growth. Dash, on the other hand, has figured out that you really need to participate proactively in growing your business. And so with Bitcoin and all these other digital currencies, they allocate 100% of their transaction fees and 100% of their block rewards towards one thing.
Which is mining.
Which is mining, the process of securing the network. But security is only one need of a payment network, right? That should be obvious to anyone. So what we do is we break up our block reward into 3 components. The first component is going to mining. The second component is paying for infrastructure. In all these other digital currencies, people are expected to volunteer running a server to relay all of these messages around the network and make sure that it's fast and everything. In our model, we pay people to do that. And so 45% goes towards infrastructure. The last 10% goes towards everything else. This is a fund, we call it treasury. And anyone can put a proposal up to the treasury. The network itself votes on those proposals, and the highest ranking ones pay out. And so even my team, the Dash Core team that does the development for it, we have to propose to the network our salaries, etc., and have that authorized by the network to continue serving it.
So it's like your own VC fund to spend on exciting projects on the Dash network, and it's voted by the community as opposed to these VCs who keep scaring people.
Exactly. So we're self-funded. We don't rely on people to volunteer their time to develop or companies to pay for some of the developers for our network. We're completely self-sustaining. And not only that, a lot of the money goes towards helping new businesses and entrepreneurs start projects on our network and help them grow. So we both incubated companies that are now serving the network, and we've helped them grow by co-sponsoring a marketing campaign, for example, where we're helping them grow their top line.
And how big is your Dash team?
The Dash team is up to about 50 paid contributors, and there's a slew of volunteers that also work with the project. And this is in addition to this, we've got a whole team of translators around the world that are translating news articles and updates and everything to the entire network.
So I'm going to ask you a question, and I know that most CEOs don't like to answer this question because they don't like to talk about the price of their tokens.
Yes.
The Dash token is incredibly resilient. When the market goes down, the Dash token never ever moves down or doesn't move down as fast as the market. Why do you think the token is so resilient?
I think that we have never hyped the coin, so we don't get a lot of those momentum traders that tend to rush in when the price is going up and rush out when the price is going down. But I think there's actually a mechanism built into the network itself, and that's a complicated thing, but basically I attribute it to what I call our master node tier. People need to have 1,000 Dash in order to run one of these master nodes, and if they sell it while the price is declining and the price starts to go back up, they fear they may not be able to ride back in. So there's kind of an offsetting fear when the price is crashing.
The fear of missing out.
The fear of missing out. And so it's very stable. On days when the prices of other coins are going way, way up, it just doesn't do the same thing. And as you said, when prices are crashing, it just doesn't fall as much. Reggie Middleton did an analysis on this. He called a lot of the big bubbles and everything, and he said that Dash was the highest risk-adjusted return he had measured on any asset ever.
So if you're looking for the highest risk-adjusted return on any asset in the cryptocurrency market, maybe have a look at Dash. I'm looking at my laptop right now and I see that the ICO that we're featuring in our ICO feature today raised $20 million in their pre-ICO, and the ICO, the public ICO, is going live today, right now. I've got Reeve Collins with me from Block V. Reeve, $20 million raised in your pre-ICO. What exactly does Block V do?
Block V, well, it's very exciting times for us in this blockchain space. What we like to call the interface moment is upon us. Anytime there's a great technology such as the internet, it takes an interface in order for mass adoption to take place. So the web browser was the interface for the internet. And then if you think about mobile, Steve Jobs came along and built the App Store in 2008, and that was the interface for the mobile platform. It allowed developers to easily build and monetize apps on top of that platform. That is what Block V is for blockchain technology. It's bringing the interface to the blockchain, enabling developers to easily build and monetize and distribute apps on top of the blockchain. But not just any apps. The environment we create enables them to create VATMs, these super tokens, tokens with app-like qualities, which we feel will change the way the world's relationship is with digital value.
Okay, I get it, but what does that mean practically? How do you use this practically?
Yeah, so right now there's cryptocurrencies, and that's changed the world's relationship with digital money. However, we're utilizing our tools and our APIs. Will greatly increase the use cases of cryptocurrencies. And so now, instead of just exchanging currencies or money, we are going to enable you to have these experiential units, which will change the way brands connect with consumers. Because now imagine, instead of a brand putting a message in front of your face, they provide you this object that is it has multimedia and policy. And so now, instead of it just being, say, here's a message, you get this object that you can buy, sell, trade, or own. And let's say it's worth $0.25 or $1. The brand provides you this object that will take you on a journey, such as an experiential ticket. Instead of a flat PDF, you get a video of the artist talking to you about the show. And then when you go in to exchange that ticket, it changes state and says, oh, you want a backstage pass. And then afterwards, it updates with exclusive content from backstage. So now you have this memento, your digital keepsake that you own. You can buy, sell, or trade, because someone will pay $5 for exclusive content from backstage of Taylor Swift that says you went to the concert, right? It's that ticket stuff that's now experiential and live and real.
Where are you guys in the development cycle? Is this a concept, or have you guys already developed the software, and is the software actually implemented?
Yeah, it's worked. We've been working on it for over 2 years, put millions of dollars into development of the platform. It scales to billions of objects cost effectively. And now what we're doing is polishing the developer tools, enabling the final polish so the developers around the world can use their creativity to build these new VATMs, these smart virtual goods on blockchains. So we believe VATM, this new asset class, will have many, many use cases around the world. And our goal is to provide the developers the tools to easily build them. Similar to the environment that the App Store gives developers around the world to build apps on mobile, we're providing the developers these tools to bring this new asset class called a VATM to life.
Reeve, you mentioned that there are multiple use cases, and you spoke about the use for a concert or for a music tour. But what other applications are there for the software? How else can brands use them? What are the applications?
Absolutely. So think about, again, back to advertising. Right now, there's $100 billion a year spent in digital media. And right now, all of that money gets sucked out and goes to the planning and buying, the technology, and then to the website, to the Facebooks and the Google of the world. The consumers don't get any of that value. So with this new asset class, the VATM, the brands will be able to create these smart digital objects and then distribute them directly to consumers. So it creates a direct conduit from the brand to the consumer. And so now Coca-Cola can create this little cool Coca-Cola game where you go around the world and pick them up and combine them and redeem them at 7-Eleven. Or they can send you some exclusive content that you can share with friends, and the more you share, the more rewards you earn. And what we're ultimately doing is providing the brands the tools to provide these unique digital objects to the consumers. And that will change the relationship, because if you're a consumer, you don't care about Coke, you'll put it on the exchange and sell it for a Pepsi or sell it for some other experience that you care about. So ultimately, it enables all virtual goods and digital goods around the world to be interoperable. And so I think the better way to illustrate it is if you think about digital goods today, they're trapped in applications or in apps. And there's billions and billions or a trillion virtual goods out there that are trapped inside these walled gardens, because today the walled garden provides the DRM, the digital rights management. Utilizing our SDK, the DRM, the digital rights management, is in the object. So now the value moves from the app to the object, because now these objects have all of the policies and they're interoperable with each other.
Awesome. So you're doing an ICO. When does your ICO start, and how much money are you raising?
So the token generation event starts today, actually, and we're very excited to launch our public sale. We are raising, there's a $20 million cap in the public sale, and this is to distribute our network token called V.
Cool. If our viewers want to get involved, where can they go?
Please check out blockv.io for more information and learn all about the token generation event.
So it's been a power-packed show, and if I had some colleagues here, what I'd do is stand up and I'd toast with a fork to an amazing show that we've had and to an amazing fork that Ethereum did almost seamlessly. Next week, I'm off to Las Vegas for the Money 2020 conference and the Coin Agenda conference, and I'll be tweeting live updates from my Twitter at CryptoManRun. The following week, I'm going to be at the Ethereum DevCon in Cancun, and again, I'm going to be tweeting live from my Twitter at CryptoManRun. And I promise you that if I get Vitalik, I'm going to grab a fork and I'm going to toast to him with a fork. Until next week, happy trading.